Stocks continue to gain despite the hawkish comments from Fed members suggesting the U.S. central bank won't pivot. Metals and realty lead the charge, while FMCG and healthcare lag behind.
The Zee Entertainment stock gains after the Competition Commission gives an assent to its modified merger proposal with Sony. Experts see the deal offering significant synergies and the stock value.
Record Class A truck orders in the U.S. in September propels Bharat Forge, while enhancement of unsecured credit support under the Emergency Credit Line Guarantee Scheme fires up financially stressed SpiceJet.
Godrej Consumer slips on low growth and weak margin concerns, while strong business momentum powers up RBL Bank, AU Small Finance Bank and Poonawalla Fincorp.
OPEC Plus plans to cut 2 million barrels in output from November, fueling a surge in crude prices and also fears of persistent inflation. This even as US says it will add to supplies from its depleting stock reserves. Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is Pavitra Parekh. And let's begin with a look at the markets. And yes, markets opened buoyant today and are also looking euphoric at this point. In fact, clearly fueled up when we talk about the lunchtime in the market. So at the moment, 17,408, so 17,400 mark has again been really conquered by Nifty 50 in last few minutes of trade, inching closer towards 0.8% gain and 450 odd points gain when it comes to sensex. So keep an eye out on that. When it comes to Bank Nifty, yes, there is an outperformance, 1.25% up, and the mid caps, they are the ones which are really fired up, closing and inching in on 1.5% gain at the moment. It is Nifty is slightly getting towards the high point of the day, which was above 17,430 odd levels. Now, advanced decline ratio, no surprises there. Market breadth is looking quite strong, and it has really defied all the Fed comments really coming in and the global, uncertainties, along with also crude prices remaining on the dearer level. So that's really a resilience showing at the moment when it comes to the market. JSW Steel, Hindalco, two metal counters which are shining in trade. Pavitra.
Oh, absolutely. It is the metals pack which has it today. So a lot of those names are doing well. In addition to that, you have some of the real estate stocks which are also holding up really well. That index itself is seeing good gains. And these are some of the larger movers right now. By the way, today, even the tech names are doing well. So take a look at some of those. These are the large cap names. Some of the mid cap names will come up for you. The likes of Persistent, Emphasis. Of course, Persistent is on that big upgrade by JP Morgan. But this entire tech space is also in focus because next week we do have the earnings which will start coming through, starting with TCS. So do keep those on your radar. On the downside, it has been FMCG and pharma today, which are proving to be a little bit of a drag. But that's what's happening with the market action. Let's move on and talk about some individual stocks right now. So the first one is Zee Entertainment. The Competition Commission of India has given the go-ahead for the Zee and Sony merger, albeit with certain modifications. So Vahishta is here to tell us more about that. Vahishta.
Well, Zee and Sony, which was long awaiting an approval for their merger, have finally received the nod from the Competition Commission of India. And this is a strong positive for the stock because the Competition Commission of India is usually considered as a primary hurdle and takes longer for getting an approval. So CCI had earlier raised concerns on the merged entity's market dominance in terms of TV viewership, a high fee from advertising, channel pricing, etc. Now, for this, Zee and Sony had made submissions to CCI and since found satisfactory, the modification in the proposal has finally been agreed to. However, the final order from CCI could take another approximately 4 to 6 weeks. There are also some pending approvals expected from the Ministry of Information and Broadcasting. There is also a shareholders meeting which is scheduled on the 14th of October, which is in the next week. Also, there are approvals which is pending from income tax and the ROC. Now, while there is a certain reason to cheer, what needs to specifically be watched out for are what are the modifications that Zee and Sony will be making, which at present is undisclosed by the Competition Commission of India as well as Zee and Sony. Now, in terms of what the brokerages have to say about this deal, Zee is trading at an attractive valuation of 15 times its FY24 earnings. And CLSE's target price is at 316 rupees, while Motilal Oswal expects an upside of 16% on the stock with a target price of 310 rupees.
All right, big upsides there have been really called out by the brokerage firms after the CCI clearance to that large transaction, forming the largest media and entertainment company, over 3.5% up in trade when it comes to Zee Entertainment. Shifting focus then, we are really all awaiting for the earnings season to begin and a slew of quarterly business updates that have been trickling in from the banking and the financial services space. So Abhishek Kothari, our colleague, our in-house expert in this space, is here to fill us in on that. Abhishek, how's this quarter going to look like?
Well, the quarter is looking good in terms of business momentum for many players, especially on the loan front. So to begin with, Bajaj Finance, the new loans have declined sharply on a sequential basis. However, AUM growth on a YY basis is the best in last 11 quarters. The new loans have declined by 8.1% quarter-on-quarter. Customer base, however, is up 19.1% YOY and 4.3% sequentially. The AUM growth remains strong, close to 31% YOY and about 7% sequentially. So average ticket size is helping the AUM growth this time around. It's up 10% YOY and 2.6% sequentially. Deposit momentum has been strong at 15.5% growth on a sequential basis. Capital was consumed as CRAR has declined to 25.1% when compared to 26.2% in the previous quarter. AU Small Finance Bank, over there also the business momentum has been pretty strong. Deposits up close to 50% YOY and about 7% sequentially. The loan growth 41.5% YOY and about 8% sequentially. CASA ratio, or the low-cost deposit ratio, that's at a staggering 42%, perhaps at an all-time high for the bank. And collection efficiency for September was at 109% versus month-on-month, which was 106%. So going on to RBL Bank, it's a mixed bag, especially in terms of deposit momentum being weak. However, loan growth has picked up. So CASA ratio is at all-time high of 36.2%. Deposits almost flat on a sequential basis and a mere growth of just 5% YOY. YOY, it's the weakest in last 8 quarters. Loan growth pretty strong on a sequential basis. The loan growth is at 4.2%, perhaps the best in last 13 quarters. And CASA also continues to grow for them. Ujjivan Small Finance Bank, strong business momentum seen over there. Deposits are up close to 45% YOY and about 10.5% sequentially. Strong disbursal momentum also seen over there, close to 56% growth on a YOY basis and about 12.5% sequentially. So the loans are up more than 44% YOY and close to 8% quarter-on-quarter. YOY, it's the best growth that you are seeing in Ujjivan Small Finance Bank over the last 11 quarters. Back to you.
All right, Abhishek, thanks a lot for rounding up all of that action in terms of Q2 business updates from some of these companies. In fact, staying with the financials, earlier this morning, we also spoke with Sanjeev Chadha, the MD and CEO of Bank of Baroda, to understand how business is shaping up. So let's listen into some excerpts from that conversation.
To my mind, there is enough momentum in this development to make sure that margins are maintained and strengthened as we go along. Along with that, again, referring back to the previous point about credit growth, that would mean that pricing power, which had got eroded because of the fact that terms of trade, very frankly, were not in favor of banks, that is also coming back. So to my mind, margins, again, ought to improve for the industry as a whole. I think there is a secular trend in terms of credit costs coming down. That has been in operation for many quarters now, and that stood even the test of COVID. So I think if you were to refer back to the results that we had reported last quarter, what you find is that the growth momentum as far as retail is concerned, that is picking up, right? It is still very strong. The fact that for banks, the model again has changed in terms of growth, not necessarily having a concomitant impact in terms of the cost base. For example, again, if you would look at BOB, the fact is that we have, as of now, fewer branches than we had 2 years back. We may also have fewer people on our permanent roles, but in terms of the growth momentum, it is actually taking off.
All right, away from the banks, which are clearly outperforming in the markets today, let's focus on the consumption stock. And one stock on our radar is Godrej Consumer, which slides after reporting it's the second quarter business update. In fact, Manglam Malu gets us up to speed with all the details from there. Manglam.
Well, that's correct. So Godrej Consumer is losing in trade, understandably, because of its second quarter update that the company has reported. And a few things really stand out from a company standpoint. In the quarter itself, the company at a consolidated level has reported a mid-single-digit sales growth. And that would mean around a little higher than mid-single-digit sales growth. That would mean around 6 to 7 odd %. But that accounts for not much as far as the profitability is concerned, because they are saying that the EBITDA may actually decline by almost, mid-teens, close to around 14 to 15% is what the street is penciling in this time, and this is on account of two factors. One, high cost inventory that the company was sitting on, and secondly, upfront marketing investments that they've been making. As far as the India business is concerned, they're likely to see a high single-digit growth, but then again, that won't be volume-backed because of higher raw material prices. They had increased the prices in soaps, and that has had an impact on their volumes, because the India volumes would actually decline in mid-single digits as well. Indonesia has been a bit of a problem for the company for the last many quarters, and that may continue this time around as well. Early double-digit constant currency sales decline. The only bright spot for them is the Africa as well as the Latin American business. For Africa, they are expecting to see almost low teens sort of growth this time around. That would mean the 9th quarter of double-digit growth. However, from an industry standpoint, three things stand out. The company says that the industry remains soft in the second quarter. Secondly, rural market witnessed slower growth compared to urban. And finally, they expect consumption to improve in the second half of this year. From the first quarter itself, everyone was talking about how there would be recovery in the second half, but they had to contend with the second quarter, and the second quarter, understandably, not looking too good. So to that extent, today's low on the stock will be crucial to watch.
Manglam, thanks a lot for getting us all of the details. So the Godrej Consumer stock down now around 4.5% after the management has flagged some concerns and saying that we could see a mid-teen kind of EBITDA decline in Q2. But with that, we're going to get into a short break now. When we return, we're going to focus on an important news story. OPEC and allies have agreed to cut production by 2 million barrels per day. So we'll bring you more on that when we come back. Hey guys, welcome back. You're still tuned into Business Lunch, and let's now talk about the big news story from the world of commodities. Members of OPEC and allies have decided to reduce crude oil production by 2 million barrels per day. This is from November, and the decision to slash production comes despite pressure from Washington to pump more oil in order to lower fuel prices ahead of the midterm elections. So CNBC's Steve Sedgwick is standing by to bring us up to speed with the latest on this one.
OPEC Plus, which has agreed to slash oil production by 2 million barrels per day. It marks the group's biggest output cut since the pandemic and is set to push crude prices higher in an already tight market. OPEC Plus said the move was motivated by rising interest rates and a weaker global economic outlook. The OPEC Plus output cut drew the ire, yes, you'd expect it, from politicians, especially in the US, where there's an election coming up, which described the decision as short-sighted. President Biden directed the country to release 10 million barrels from its strategic petroleum reserve in the hope of keeping prices at the pump down to deprive Russia of oil revenue as well. The decision casts OPEC members' relations with Russia into the spotlight at a time when the US and the EU are set to impose a price cap on Russian oil exports. The White House press secretary, Karine Jean-Pierre, said the move to cut production and raise prices showed that OPEC countries are siding with Russia.
OPEC's decision to cut production's quotas is short-sighted while the global economy is dealing with the continued negative impact of Putin's invasion of Ukraine. It's clear that OPEC Plus is aligning with Russia with today's announcement, and I'll leave it as that.
All right, so crude prices there because of the lower supply could be remaining expensive, and that could really add to inflationary pressures that we are seeing across economies. Now, let's also listen into what Bank of America Securities Francisco Blanch had to say on the OPEC's decision to cut the production levels. Listen in.
We think from here on, we're likely to see upside. Obviously, 2 million barrels a day is above expectations. Now, I think one of the big questions is, are we really going to get a 2 million barrel a day real cut, or is it going to be a 2 million barrel a day nominal cut that is essentially readjusted by the fact that OPEC itself is producing by 3 million barrels a day under their actual quotas. So I think if you reallocate those countries that are underproducing and they don't actually cut, you'll get probably more like 1.2 million barrels a day actual cut, as opposed to the 2 million barrel a day headline that they're talking about right now. OPEC actually wants to put upward pressure on prices because they are not happy with the levels that they see.
All right, that is some important opinion that we're tracking on the crude oil prices as well as the OPEC's decision. But with that, we're going to get into a short break now. When we come back, the Department of Financial Services has modified the ECLGS scheme for the aviation sector to give out collateral-free liquidity to tide over cash flow concerns. This allows airlines to avail funding of up to 1,500 crore rupees. So all of the details on this story when we return.
Welcome back. You're watching Business Lunch, and take a quick look at the markets at this point. And yes, Bank Nifty has given up some bit of gains. In fact, take a look at some of these heavyweights like SBI as well as HDFC Bank. They have lost some ground in the last few minutes of trade that we have seen. In fact, when we talk about Nifty 50, that is now 117 points up in trade. When it comes to mid-cap, still a roaring high, in fact, outperforming the overall markets with 1.27% gain. But the metals counters, they are really shining and have become even more dominant now with over 4% gains on three of the important counters like Hindalco, JSW Steel, as well as Coal India. But let's shift focus on LIC, and that stock is flat in a otherwise buoyant market, and LIC likely to really pare stake to below 20% in IDBI Bank divestment offer. Both government as well as LIC together may offload approximately about 60% in the sale offer is what we are gathering. In fact, one important alert that the expression of interest for IDBI Bank by October 15th is slotted, so to be watched out for very closely. And LIC, remember, holds 49.2% stake in IDBI Bank currently. Well, moving on then, the Department of Financial Services has modified the ECLGS scheme to allow the airlines to really avail the necessary collateral-free liquidity at reasonable interest rates to tide over cash flow issues, allowing the airlines to take up to 1,500 crore rupees in credit. And sources tell us that as part of this particular scheme, SpiceJet's expecting to receive an additional 1,000 crore rupees to support its operations. In fact, our colleague Parikshit Luthra has been tracking this very, very closely, joining in on right here with us to tell us more about this development. Parikshit.
Well, the government's decision to modify the ECLGS scheme, especially for the civil aviation sector, allowing companies in this area to avail of support to the tune of 100% of their requirements or 1,500 crores, whichever is lower, has been welcomed by the aviation industry by and large. SpiceJet, we learned from sources there that the company is expecting to receive at least 1,000 crores as part of the modified ECLGS scheme. And the company says if they do receive this funding, they will be able to significantly improve their operational efficiency, improve profits, clear older dues, statutory dues, lesser payments, include new MAX planes in their fleet as well. Remember, there have been a host of financial issues that SpiceJet has been facing. Their MD, Ajay Singh, also going on record to say that they hope that the airline industry's wish of getting ATF included under GST would also be heard by the government and accepted at some stage in future. Back to you.
All right, Pariksha, thanks a lot for bringing us all of these details. So SpiceJet now up almost 6% on the back of this news. But a quick look at the market, which is holding up completely steady right now. It's around 130 points higher on the Nifty, so pretty much around the high point of the day. But it is the mid-caps which are looking extremely solid today. That one will also come up for you. It's a 1.3% gain, and the banks have also moved up with a gain of over 1%. So with that, we're going to wind down on this edition of Business Lunch. Thanks a lot for tuning in from the entire team. We have Mid-Cap Radar that comes up next.